Market Review. I'm your host, Robin Murray, here today with Senior Market Strategist Joe Smith. Hey, Joe.
Hey, Robin. How are you doing?
Good. All right, I want to start out by talking about China, which is something that we hear a lot about in the news, as always. Why do you think investors should still be thinking about China in their portfolios?
Well, I actually think there's three themes that state a bullish case for China longer term. One, in terms of urbanization, obviously more and more people are continuing to move into more urbanized areas from the rural parts of China. Two, incomes are actually growing at much faster rates than what you would actually see in other countries around the world. And three, nominal GDP is actually expected to be greater than that of the U.S. by 2022.
Wow. All right, and I also want to talk about global market integration, which you've written about this week. Why is that something that's important to understand?
Well, as you think about how we all interact with each other and markets becoming more integrated, where that really plays out in your portfolio is in the context of diversification benefits. So as correlations tend to go up, what you tend to see is that those opportunities to manage risk through diversification tend to go down.
All right, and finally, I want to talk about the Federal Reserve raising rates, which is something that we're watching, of course. How do you think that's going to impact U.S. equity markets?
Well, if you actually look at that in the context of probability theory, what you would find is that since 1979, in situations where the Fed has raised rates, U.S. equity markets actually tend to be up by about 1.5% or more per month. So.
All right, so not too bad. All right, interesting stuff. Thanks, Joe. And that's it for this week. We'll see you again next Tuesday. Thank you for your time and trust in CLS Investments.